Alright, so I welcome us all to today's session of our class, and as God begins to help us, we'll dive into another powerful, knowledgeable session and see how God can help us. Alright, so last week we spoke about couple of informations on fundamentals, and I gave us some insights on that. So before we go for today's class, can I have somebody that could just give me within 1 minute what we spoke about last in our class, and what were the things we discussed and lessons and things you were able to learn, our previous knowledge on our class. So anybody please. Can you use your mic if you're not in a noisy environment? Hello everyone. Everyone sálẹ̀ àbí? Ẹ máa ṣe lọ́wọ́, mo wà meeting kan lọ́wọ́, ṣẹ gbọ́? Ẹ máa ṣe lọ. Màá ní kẹ́nìkan wá bá yín sí. Sorry guys. What's this? Sorry, please give me just give me 20 seconds. The service apartment guys in my house is fixing something downstairs, so I need to just see how what is this thing again? Okay. Alright, sorry guys. So yesterday, sorry, the last class, is anybody talking please? So who is giving us the information? Who's giving us the information please? Why is this thing? Is anybody there? Alright, so please unmute yourself and just talk. So do I have anybody giving me information on our last class? Okay. Okay. And I want to believe we've been able to analyze the fundamental aspect of the market majorly now. Alright, so that's a good one. So I want to believe everyone as well as learned majorly about fundamental. Like now we'll be having the inauguration of Donald Trump into government this coming week. And that will be a very big push to the market. So it's gonna be an influence to the market. So I want us to be upside about these things. Like next week now, the event will definitely affect the market. And it might not just affect the markets for a whole week, but for as long as I inaugurating in that very moment, there will be an upside or downside in the market. So something must affect, the influence must be tilt on the market, and it will reflect in the market. So having said that, remember I said one thing, fundamentally is majorly outside the space of the chart. Anything fundamental, it is outside the chart, and anything technical is within the chart. So this is us trying to read price. This is us trying to read price. So whatever price does is what we trade, and it will eventually get to a point that every of our trades will be based on fundamental and technical. We cannot rule out these two major factors. Because why, they are one of the most one of the most major prerequisites considerable before anyone can take any trade. You can't trade without fundamentals, and you can't trade without technical. And there are days that you don't even need to trade with fundamentals. Why? Because there will be no event in the market that will cause any disruption. So all you just need to do is analyze your market technically and make your money and move. If it is 20 pips you want to do it per day, analyze the market and make the move. And once you make your 20 pips, let nothing take you back again. Remember I said everyone must be able to write out 10 trading principles for yourself. And everybody is submitting on Tuesday. I write it out. Preferably, I will even prefer you type it out on your laptop. Then I will give you, on Tuesday, we will all have the mic to ourselves. We all have to mic to ourselves to present your trading rules to us and read out to us, and everybody will do this. Everybody will do this on Tuesday. So write out your principle. It might not be up to 10, but the maximum 10. As maximum it should be 10. Mine now, I want to change my own. I sent my trading rules in front of my desktop like this. I pasted it like this. It's a frame. So I sent it back to redo it again. So once this guy, sorry please. Hello Egbon. Ẹ ti parí àbí? Ó ti ń ṣiṣẹ́ àbí? Alright, ẹ ṣé gan sir. Sorry about that please. So once we consider all of these things now, it gives us a very good ground. Remember, I've got so many people saying, I don't know what's going on, I'm not getting forex is not working for me, my village people are following me, these ones are doing me. No, nobody is doing us. It's just that you don't know something yet. Get it? You don't see what somebody struggles with is because you don't know. How will I put it now? When you struggle with something, there must be something you don't know that are struggling with. That's why you're struggling with it. Someone that cannot work is struggling with a particular setup in his bones that needs to be fixed. So the information that we need now is what we are listening to now. This is what we're hearing, and I will patronize. I will give it full attention, and don't take it for levity. So majorly technical analysis is the study of price movements. Remember what I said now. Technical analysis is majorly the study of price movements. In one word, technical analysis, which is the chart, the idea that a person can look at historical price movement and based on the price action can determine on some levels where the price will go. So which means you can base your bias, market bias, based on the past events. Do you get it now? Based on past events. So you can base your decision based on past events. Now, for whatever that must have happened in the market before, there will always be a reoccurrence. Like, how do I put it now? Markets move like a roller coaster, and a roller coaster does something like a reoccurrence movement. It moves as if it's moving within a time loop. Do we get it? So there's always a reoccurrence movement, a wave of how the market works. Now, the understanding that you now need to keep yourself checked with now is, how does this wave come in place? It gets to a point, it stop. It gets to a point. Now, for example, let me show us something. When you look at this market now, I had a sell here, which is because of a change of character. It went far. The sell, it initiated the sell here, came down, but the sell needed to do a lot of more conviction of, this is a lower time frame, 1 minute time frame. But when I come to about 15 minutes time frame and you see it well, you realize that there has been an uptrend in the market before now. I want to believe we are all seeing this, isn't it? Now, there has been an uptrend in the market before now. Now you realize that market now went back up. Instead of market to respect this zone, I was actually in this sell. I was in this sell, this long sell here. I was in this long sell, but technically and calculatively, this is the point I need to exit the sell, and of which what I exited. So my next move was expecting markets to what? To take a buy like this. That was the next move I was expecting. I want to believe you are communicating with me. This was my next move, expecting the markets to do. But what did market do? Market failed. This order block, this demand zone here, this demand zone refused to hold price. So what happened? Price broke through it. Price broke through it. And we now have what we call what? I really don't know if we'll be able to catch up with this one, but I'm just trying to explain something. Sorry for jumping. So markets created something we call CHOC here. Let me use the chat box now and I'm sure everybody's with me. Whoever is in the marketplace, you please mute himself. Alright, so if you see what I'm doing now, market did this. My expectation initially was for market to bounce here, respect this block, and move up. Are we seeing it? This was my expectation before. But market did what? Broke through it. Immediately it broke through this place. What happened? There was a change of character. Remember when I say change of character? Let me show us what market did with the trading view here. So there was a clear change of character. So this was what happened. Market has been doing this. Market has been doing this over the time. So market has been doing this over the time, and now my expectation was when market was going to come back to this level, market should what? Bounce back here and what? Buy as well. But the market failed to what? To buy. So what happened? It broke the demand zone and came down back. Now, after whenever market changes character, I want to believe you are listening to me and following me. Whenever there is a change in character in the financial market, there is something we call rearrangement of setups, like the way you begin to see your setup changes from an uptrend. Now, whenever market changes character, it won't just change character and just keep going. There's something we call market need to go and take 50% of the sell pressure or the buy pressure. Now, market has been buying this much. Now, it has broken the trend, the initial trend, which is a change of character. And the expected move that should be done is this. Market will buy up to at least 50%, which is 50, this is the 50% of the market. So market will buy up to at least 50% of the price movement. But according to ICT, there's a level we call it. I don't want to go far deep into that one, but I will explain to us sooner. I will explain to us when we get to that stage. Market will buy up to at least 50% of this place. That is what support and resistance will tell you, that market will buy to at least 50%. So once it buys to this level, so it can either be a fair value gap or an order block that will be doing the job here. So when the market gets to probably a fair value gap zone or the order block zone, you could just test it and what? Buy down. Then what are you now seeing now? You are beginning to see change of character, which means market has changed from uptrend to what? To downtrend. Now, this is simply what has happened here. Sorry, please. Now realize that market has been going far up at this range. Are we seeing this? Market has been going far up at this range, which means we've been having major buy zones. Whenever market traces, it breaks every new high. Market breaks every new high, and every new high is regarded as liquidity. Whenever market creates a new high or a new low, it is regarded as what? Liquidity. So you can either call the liquidity or your 1 hour high, 1 hour time frame high, one day high, 3 days high, or 2 hours high. So these are levels and high side and low side that we're expecting market to take out liquidity before returning back to the next demand or supply zone. Now, these are demand zones. These supports that we are seeing here are what we regard to as what? The demand zones. Okay, let me just label it here. So this that we are seeing here is what we regard to as what? As the demand zone. And this is what we regard to as the demand zone. Now you realize that as market is bouncing on the demand zones, it keeps bouncing on it and keeps going back to take what? The high, the latest high. So whenever market breaks out of the past high, it creates a new high, then returns back to the new low, which is the next order block, fair value gap, the likes of them that we'll get when we will talk about them when we get there. So all of these things now, market moves like a roller coaster. That's what you need to understand. There's a prerequisite and rudiments to how the market moves. You just need to understand it. And one of the things that you need to understand is that once market does not give you what you are seeing, you don't need to trade. You don't need to force your trades to come if you don't see what you're expecting. Now, you don't trade what you want the markets to do. You trade what you are seeing the market doing. It is until when you see the market doing something, you trade it. You don't trade it when the market is not doing it. Do we get it? So now there has been an uptrend. Market has been taking all highs. First high, I1, I2, I3, I4. This is the higher high, higher high, higher high, another higher high. Are we seeing that? Now, the latest high, how will I put it now? The highest high, the newest highest high in the market here has not been able to be what? Taken out. Which means we still have an exist. There's still and there we still have a liquidity standing tall somewhere and has just been taken out. Why? Do we have that? That is because there is something we have here that has happened, which is what we now regard to as what? Change of character. We call it CHOC, change of character. Are we seeing this? We call it change of character. Market has not been able to take this high. So this high remains an unmitigated high. The high, it remains an unmitigated high. It has not been mitigated by the price, by market. So until market has been able to mitigate it, nothing whatsoever is going to stop it from moving. Sorry, please. Okay, good. So I believe these colors are clear enough for us to see. So this is an unmitigated high. So, and when a particular high has not been mitigated, it becomes a supply zone. Are we getting me? Now, this used to be the demand zones. These lows are the demand zones. Demand zone. Another demand zone. I think one of the way you can help yourself is after the class is to make sure you go and make sure you go and watch this class again online. So which will help you to understand it more better. So this is the first demand zone. Price came down, went into it, then went right up. Second one, price came down, went into it, then went right up. Third one, price came down, went into it, then went what? Right up. So these are demand zone, demand zone, demand zone, demand zone. Now, this is the latest high. Now, market ought to have come down to this next demand zone, which is this guy, which is what I was trying to show us from the trade I am right now. Now, remember I said it here that I took this sell from here, expecting market to what? Then when the market got here, I stepped out of the market, which is a normal place for a retail trader to have stopped out in this trade. If a retail trader keeps holding the trade, expecting him to break that low, that means that trader is trading based on zero knowledge and sentimental information. Because by analysis and by critical um um how will I put it now? Critical conditions in the market. By analysis, market is telling me that this is where I am supposed to step out, and of which yes, I took a sell from here and stepped out here, which gave me about $150, and I stepped out of this place. Now, my expectation was for market to do a new buy. I took a buy and I got stopped out at this point. Do we get it? I took a buy from here and I got stopped out at this point. That was last night. So this morning, I realized the market has broken this low. Now, what market is doing right now is that market is coming down, is buying up to my fair value gap session, and that was why I left. Remember now, we are seeing that there's a sell here and there's another sell limit here. There's a sell reading presently at 0.50, another sell limit reading at 0. That is if the market gets there. Do we get it? So all things being equal, if price begin to ride me like this, I expect that price begin to drop. And if price refuses to drop, this is my level of stop out. Are we seeing this stop loss level? This is my stop out level. At this level, I'll be preparing to what? Stop out of the market. Why? Because by analysis, market should not buy up to this level. And if it's going to buy up to this level, at least it will buy up to the probably I was considering the 4-hour order block at this point. It buys up to this level and begins to sell. But the reason why I'm continuing to take a sell from here is because I have a convincing fact with this candlestick. This is what we call as we commence, we'll also be doing what we call candlestick interpretation. So this is what we call a reversed hammer. Is it called reversed hammer? No. We have the hammer, reversed hammer. Yeah. So we have what we call the hammer. When price rejects to buy, and then sellers take over, they now turn the candle to an hammer. Then, so this is an opposite of hammer. So this is a reversed hammer. The same way this should be closing. So if this one closes at the end of 4 hours and it closes, so my expectation now is this candle must be able to close below the low of this candle, which will give me a convincing fact that any sell I am in is safe without pressure. So look at this structure you are seeing here. Look at the structure you are seeing here and what I just did now. You realize that they are the same structure. All you just need to do is be able to pattern yourself in the market and know how you get in, know how you come out. That is the only case that you need. Because some people don't know how to, you don't know the prerequisite that you should have for you to get into the market, and you don't know when to leave the market. You just trade it based on sentiment and being biased about it, like let me enter when I want to, or let me just quickly scalp. And it doesn't work that way. Scalping the market makes it more difficult for you. Why? Because you'll be trading with zero knowledge. And probably preferably you are just being on how do I put it now? You'll be trading based on what you think the market should do. Like you quickly want to make the profit by scalping, and before you know it, you get caught up. So now, what I was explaining before, market has been doing all this, like we've been seeing, like we see here. Market has been coming all right up. Market has been coming all right up like this. Same thing which I drew here. Now, when market got here, price could not break this place anymore. Why? Because price has already taken out this demand zone. This demand zone should have hold price and drive price to this level like this. This was what price was ought to have done. But price didn't do this. But what happened? Instead, instead of price to do this, price broke out this demand zone. After breaking it out, what happened? It sold back. Now, naturally, it is not your duty to now begin to sell the market with this guy as it is selling. No, if you are doing that, that means you don't know Forex. There is an information that you still need to know about Forex. So, the reason why this happened, just leave it. With time, price will return back to your POI. POI means point of interest. Price will return back to your point of interest, which is you patiently waiting for price to return here. So once price returns to your point of interest, which is the same thing I did here, price returned to my point of interest, picked all my position, but has not picked this one. He left this one. It was just few pips left, so it missed this one with just few pips. So you could have just taken it, but I don't need to rush into it. I already have a position ready, and that position is enough to give me what I want. Do you get it? So having said that, now price returned here, and at this point, what would I have done? I would have taken one sell from this point, and then another sell from this other block zone. So this is the question to us. Where will I put my stop losses? The stop loss for these two positions, where will I place them? I need answers. So I want to be sure we are getting informated. Please, okay, sorry, I took it out. So please, somebody unmute yourself and explain to me, where would I place my stop loss? Are we all following this class? Alright, so please, where will I place my stop loss? Remember I said this line here, I've taken sell positions because I have waited for price to return back to this zone. I have taken one sell and another sell position. Now, if I'm to put my stop losses for this position, where will I put it? Solomon, you are not in a position to talk. Don't worry. You don't need to talk. I know you know it. Mm. All right. So where will our stop losses be? Remember, this is no longer a demand anymore. Price is now supplying from this place. Why? Because this is our next supply zone. This is the demand zone. It failed to hold price. Now our next supply zone is this guy. So if this guy is supplying price to us, where will our stop losses be for the positions we've entered? Adebanjo, Omoloye, Fawole, and Samson. I am throwing the answer to us, to you. Where would the stop losses be? Because of course, every trade you are taking should have a risk. Should have a risk to reward ratio. You know what? It's okay. Just check the chart and look at the price. What price would the stop loss be? Pick any price from here. Pick any prices from this top to the bottom. Where will we put our stop losses? And where are we going to put our take profits? Okay, let me just assume this does not exist. Now, I've rubbed up all the movement. Now we are expecting price. Price has gotten to our level to sell. Now we are not expecting price to sell. Now we have the positions running. Where will our stop losses be? And where will our take profits be? Please go ahead and talk. Probably. Yeah, morning, bro. Okay. Yeah, right. Okay. Okay. All right, that's fine. Mr. Sampson, what's your view? Okay. Go ahead, I'm with you. Okay, sorry. Yeah, of course, yes. Okay. Okay, good. That's a good one. Thank you for that. Anyone else wants to try? Okay, that's those points are they are very correct, very correct. Exactly the same thing I would have done. So they are very correct. But at this point, you said something. Fola said something that he would have taken out his profit from here. Of course, prevention is better than sacrifice. Do you get it? But however, professionally, I'm not saying it's bad, but you can't live that lifestyle you want to live by running out of the market. You get it? So market is there to make money. So it's a do or die affair for me. It's a do or die affair. It's either it kills me or I kills it. So far I'm not risking all my life in one trade. You get it? So, and of course, why should I risk all my account on one setup? So if the setup works, that is me doing best Niger. And if it doesn't work, imagine you get stopped out before your stop loss. Is that not funny? Or for us it's funny. So that's the way it works. So what I do is whenever I'm in a trade like this and I get to at least the point where Fawole spotted where he was talking about that price might probably just give a faking another. So here what I just do is I take partials. If I'm running a position of one lot size, you can close out 0.50 out of that one lot. In case you open it in one position, you can just once you get to that close, once you say close, you just change the lot size. Close out 0.50, so it takes out 0.50 profit for you and leaves the remaining profit of $50 to be 0.50 to be reading. Or if you have like multiple positions, you can just close out like three. Close out, okay, let me just say you close out 80% of your profit or 70% of your profit. Then you leave the remaining 20% or 30% to read out to TP. That is the way I do my thing. And by the time I'm leaving it to read, what am I doing? What will I be doing here? What will I do to all my positions here? So let's say for example now, price get here, we close out. That means we close out this nearest position here. We take it out. That close. So this one is gone already. That means we have only one position left, which is this guy. So as a retail trader that needs to be secured, what do you do with this kind of setup now? Once you are still reading, what do you now do? There's something we call you lock profits and secure funds. How do you go about doing that? Now, this is what you do. You make sure you bring your stop loss below your market position. This is my position here, and my stop loss was here before. So what do? I am reducing the risk of my account that I've done before. Now I want to reduce my risk to reward ratio. Why? Because my account has gone far long in profit. So I'll just bring the stop loss below this point. So whatever the market does, anything that happens in the market, you feel is certain that you are secured in the trade. Why? Because market will not just come and take you out in negative when you've already secured your profit in positive. So this is what we call locking profits. When you lock your profit, so as the market is moving down, you keep adjusting stop loss. As it's going down, you keep adjusting stop loss. As it's going down, you keep adjusting stop loss. So as far as it's going, so you could retest again, just keep adjusting stop loss. By the time it takes you out here, or preferably if it doesn't take you out there and now comes here, and market now retests a little bit and it takes you out here, you are still winning. Do you get it? So it's better than just risking your account and everything goes back to stop you out. Some people will not even stop out. They will remove the stop loss here and market will now start reading. Before you now know, they will come to my DM. Mr. Francis, I blow my account. I won't say sorry. I will just say, tell me how it happened. Once I see how it happened, if it is worth saying sorry, I will say sorry. If it is not worth saying sorry, I will say go back to your book. Do you get it? I will tell you go back to your studies. You need to go and check what you did. If it was something that somebody can chastise you with, or I can sympathize with you. I don't sympathize with you on an error that you cause. I sympathize with you on an error that you probably um, um, analyze the market. Of course, that is it. But when you cheat yourself because of greed, that happened to me before. Market was right in my stop take profit like this, kissing it, and it refuses to close. It was a very disastrous result. You see, this moment, it can mess you up. Like, it can just mess you up for no reason. You can just get angry on no reason. Market was right in my TPA, reading about $70. I think this is about a few weeks back. $70 reading. For me to have just closed, I have just it was just maybe 2 or 1 pips left. That would just give me one point something dollars. And I didn't close. Something was telling me close. Something was saying that $1 would do a lot of things. Funny, right? So something was telling me that $1 would do a lot of things. Another thing was telling me leave it now, it's your TP. Market must take out liquidity now. So and right under my nose, market did a double bottom and went right up to my position. This thing was almost getting. I was already $1 left. I said, my God, my whole system was getting messed up. Psychologically, I'm already angry. Mentally, I'm not stable. I was angry at myself, angry at the market, and then that how would the price just go like this? Take out liquidity. If it is just small, take out before you start going. I was talking to myself and the market. Yes, I broke one of my rules. Why? Because most times I'm always taking my own profit because before TP. Once price is close to my TP, I mostly don't wait for it. Except I'm busy outside and I've already locked my funds. If it happens while I'm not there, I won't be angry. I will just say, damn, I didn't see this happening. But I was right on the seat. I could have just taken this loss and just go back to my Netflix and chill. But then I was looking at $1 that this thing was close. The thing went right up, came back to that same position that it was kissing the market. I was now beginning to say, yeah, close, 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 close. Nothing. The thing just kept kissing my TP and refused to close. Do you get it? So I could have just taken my profit and move on. All I have there is just $2 or $1 left. So that implies that if I had taken partials, I would have just said, okay, let me take whatever I have here. In short, just take the profit because you've made more than enough. So market refused to take out this liquidity and did what we call a double bottom and bought right from here to the top. It bought right from here to the very top and kept buying, kept buying, kept buying. So it got to a point now, me, there's a way I do my thing. That's why I don't like giving people signal. If I give signal, you might take the loss, but there's a way I will come back from the loss without taking the loss. So when it got right up here, I was just making sure that I look for every position to just get my money back. So at this point, I was telling myself that I don't even want profit again. Just give me my money back. Give me the loss that is really back. So when it got here, I saw a sharp breaker block. I just put in a very big lot size that gave me like 5 pips and recovered the loss, and I closed everything with just 0.055. Imagine. So I lost about $70 to eventually make 0.55 cents. So this is where that was what I was saying. So closing out is a good idea, but taking partials would have been a better one for you to make more profits while it goes down. Then once it's approaching your TP, just few pips left, you can just you can use the advantage for yourself. You can take the job on yourself to close it yourself if market is not closing for you. Do you get it? You see, most times take profit don't tend to work when you are sitting with it, but it tends to work when you are not with the chart. You will just come back. Sometimes I'll just probably step out. Maybe I just went to a bar, went to probably just step out to a resort center or just go and get something to drink. Before I come back home, I would have just seen markets eat my stock, take profits, and I'll just come back home. Sometimes I will not trade all the day. At night before I wake up, set up. I wake up this morning, set up as taking position, as taking profits, and that's the way it works. So whenever you see stocks like this, so one of the prerequisites is the reason why I'm running on this trade, working with these two positions. So if market tends to get here again, that is another way for me to layer. Then stop losses here, expecting price to drop all the way down, like we're saying now. Are we getting it? So that is the way setup works. So once you see the setup, you ride with it. Once you don't see it, you don't. Do you get it? So that is the way. That's all about this. So this is actually a jump of study into what we're not meant to do, but it's a good one. I like the fact that we did it, and I believe it is understandable to us all. So back to the material. So the most important thing By looking at the chart, you can identify trends. Note, by looking at the chart, you can identify trends and what? Pattern. So this implies that market does not just move on a single file. Market moves in structure, trends, and patterns. So you need to just understand how the structure works, how you can enter. You see, one of the most important thing in market is when to get in and when to exit. If you know this, you don't have a problem. But if you are finding it difficult to understand this, I'm sorry, you might be struggling with the market. Why? Because you need to know when to enter. See, there are days I enter last night. Yeah, I entered a trade. Immediately the thing took my position. It went right. It rode down, almost ending my TP, and I closed out before TP. There was no negative. So which is what we call sniper entry. It happens. In short, it's not just once in a while thing. I do it all the time. Why? Because there's something we call refine order blocks, refine breaker block, refine fair value gap, and all of these things. Which means there's a way you can refine your analysis by risking the amount of money instead of you risking a lot. You will refine your analysis. When we get there, I will dive in into it, and we'll see how far God helps us with that. So can't take for right now, bro. Sorry, please give me seconds. All right. Good. Okay, so that is that about that. So the most important thing you will ever learn in technical analysis is the trend. Many people have a saying that goes, the trend is your friend. Hence, follow the trend. So imagine you are not following the trend, and if the trend is going up, okay, please do. I think sorry guys, please. Uh, yeah. See, okay. Sorry, please, guys. Sorry, please. He told me. I told him we need to buy drumsticks, then vellum, and the bass drum vellum. Okay, so that's the only thing. But I didn't give him prices. So as a guy, so just tell him. You just talk to him about what you think should work out. So I didn't give him quotation. I've only been disturbing him for sticks, so should be getting one carton of stick. Like instead of me buying this, but I'm always buying single stick 20k. So instead of that, let's just buy one carton of the stick, then drum seats that has backrest, then the vellum and cymbals. That's all. I didn't give him quotation for the stick. It was one guy in church that I don't know his name. David. This David guy that works at the protocol. So he is the one that sells. So was one that gave him quotation and all of those things. But since you are the one buying now, just give him your own quotation and get it. Yeah, please. The drum seat should have backrests. The drum set should have backrest and it should be those strong ones that won't be falling and falling down. Yeah, please, the one that has backrest. Thanks, bro. Preferably Tama. Tama and those quality ones. Sorry, I'm really sorry, guys. Yeah, sorry for the break. So, as I was saying, the trend is always our friend, and the most important thing is what makes us more profitable is when we vehemently follow the trend without when we vehemently following the trend when we follow the trend without antagonizing the trend. So it's very important we're able to spot trends, patterns, and structure, then we follow them religiously. We shouldn't be trading against what the market, like that was why I said, please don't trade what you want the market to do. I've always made some mistake in the past. I am always wanting the market to do what I want. And I'm not always wanting to do what the market is doing, what the market wants to do, what the market wants to offer. So this is me now telling that go up, say I want to go up, not coming down. And it doesn't work that way, which is why you need to analyze the market vehemently and structurally. So whatever it is you see the market is doing, there are some times that I will analyze, but I will be skeptical about my analysis. So I'll just tell myself that I'm not sure of this thing. But there's something in me, I'm not sure of it, but then before I know it, to be in profit, before I know it, it goes to loss. And once it goes to loss, I know it won't come back into profit again. Why? Because I know that this analysis it's not going to work. But because I want to make money by force, I entered it. So there are some times I will enter some setups. I will not even check back. Before I come, it has already gone massively into profit without going to loss. So of course I know the way some of these things works. So whenever you see them, don't trade what you want the market to do. Trade what the structure of the market is giving to you. Then follow it religiously. And realize that spontaneously you can trade spontaneously for 1 week without having losses. I've been trading for a couple of weeks now. I can only say I've closed if I close loss maybe once or twice. Then I say okay, let me just take this loss. Get it? So but I can be in a trade for 2 days, reading setup, and to be in profit. I can be in some trade that will be in loss for like 3 days, and eventually comes to my take profit. Do you get it? So that's the way it works. So if you're in the structure of the games give you the money. But if you're out of the structure of the game does not give you anything. Do you get it? So that's the way it works. So the trend is your friend. The reason is that we are much more likely to make more money when you can find a trend and trade in the trend. Yes, and trade in a trend. Um, Technical analysis can help you identify these trends in its earlier stage and therefore provide you with very profitable trading opportunity. So now I know you are thinking for yourself, geez, there's this guy, these are just stories. So this is more important that you want to trade in the structure of the market and all of those things. Okay, let's say that you are looking at the chart and you find a good trading opportunity, you will get all excited thinking about the money that's going to be raining down from the sky. You say to yourself, man, I have never seen more perfect trading opportunity. I love my charts. You can proceed to entering the trade with a big fat smile on the face, the kind where all your teeth will show you. But then wait, all of a sudden the trend makes 30 pips move in the other direction. Little did you know that there was an interest rate decrease of your currency. Oh, now fundamental effects. And now everyone is trading in the opposite direction. Your big fat smile turning into mush and you start getting angry at your chart. You throw your computer on the ground and begin to pulverize it and you just lost a bunch of money and now your computer is broken, and it's all because you completely ignored fundamental analysis. Can you see? So as much as you are considering technical, you're also given the chance to know what could affect your trade fundamentally. Do you get it? So the teeth cannot work without the tongue, and the tongue cannot function without the teeth. That's the way it works. Technical, fundamental pushes technical, and technical pushes itself, but fundamental can override technicals. Do you get it? Fundamental can override technical. Anything can happen. You get it? So that's the way technical works. So for my next class, we'll be spending more time on the chart. We'll go into line charts, bar charts, candlesticks, and we'll explain types of candlesticks. So I would like us to go and take a deep study on it. I will send a material to us, a candlestick Bible. So from there we'll take, that one has more information than this material here. So from there we'll take the class. We'll take the class next week, and we'll proceed and see what we can go from there. So tomorrow, next I will be Monday. So Monday we'll start candlestick analysis, and we'll spend more time on the market on Monday. So at this junction, I want to believe we've been able to learn something. So please, the mic is open to us. Any question before we take, we can take before the end of the class. So anybody with questions, so please go ahead. No questions here. So I want to believe all we've been doing is has been understandable so far, so good. So without much further ado, I want to believe every other person as well as a level of understanding. Omoloya, I'm very sure it's well understandable to you, because I'm very sure you're already eating the material already. Is Fawale still here? Okay. Yeah, okay. So I want to believe you've been able to capture something today, right? So trade the plan and not your sentiment. And whenever it comes to trading, please rule out your emotions, and don't let your emotion judge. Don't let your emotion affect your judgment, because if it does, it's definitely going to affect you. You have no choice. It's not an option. It's definitely not an option. It will definitely affect you. I don't know if you are talking Fawale, but your production is kind of. So, to this, we bring the class to an end. The video will be uploaded. The video will be uploaded to my YouTube channel before Monday, and I will send all necessary informations to you guys. And I want to believe you guys are catching up with the last video. So spend your time with it. Spend your time with it. Learn and relearn, unlearn and relearn again. Because there's a lot to cover. Yeah, so I know Omoloye did. I know Omoloye watched. So guys, make sure you watch the video and spend your time to it. Not just watch. Subscribe to my channel and follow and like, so at least it's a little thing YouTube can give me. So let's see how far God helps us. This journey will be definitely profitable for every one of us if we are consistent in the game. Trust me, I've burned so many bridges, and that is why you people are paying for it now. And the bridges I've burnt is I'm jumping those bridges now to ensure that none of you get your fingers burnt. Even if you get your fingers burnt, you only get your fingers burnt to build experience, because I'm very sure. I'm not telling you now that you've attended my class and you won't be having losses again. Get ready. More losses are coming. But because I have taught you, there's something we call the risk to reward ratio. You are not just trading blindly, you are trading with information, you are trading with resources, you are trading with knowledge. So you are not risking all the money you have. One of the reasons why I've not been able to liquidate out of Forex, somebody was asking me that, Mr. Francis, how do you survive? How do you cope? How do you do this thing? You don't have any other thing you do with yourself than Forex. And I told them, well, I can't explain, but I know, because I know that I have nothing else I'm doing. That is the reason why I'm always more serious and careful whenever I'm trading. I trade what I see. I don't trade what I want. I trade when I'm not supposed to trade. I sleep when I'm supposed to sleep. I read when I'm supposed to read. I don't show up in the market all the time. I show up when I know I see something. You can be in the market for 1 week holding on to losses. Like you are banking in losses back to back without making one profit. So you could have just given yourself a rule. I don't want to trade for the next 3 days or 4 days. And that 3 days, 4 days, you'll be at peace emotionally. And probably the 5th day you are trading, you just see one setup without rushing into it. Pam, pam, 5 minutes, 15 minutes, you are done. You've made your money. You get it? So sometimes it's just about patience. It's about calming down and knowing that you can't make $1 billion in 1 day. You can only grow yourself with a matter of time. Like I mentioned to us now, I've been growing an account of 200. The account is in $1,000 now. Consistency, no pressure. Trading what I see, not trading what I want. Do we all get it? So as time begins to permit us, when we are done with this whole class structure, we will dive into the system, synthetic market. I will drop a link for us to open an account as well, because we'll be doing that, because that's one of my major. So we'll be doing that as well, because it pays. It pays. It's very volatile. In fact, it is far volatile than gold. The likes of volatility 100, volatility 75, crash and boom index. I know how those guys work. When I tell you I know how those guys work, I know the way they work. Just while I was in video yesterday, I made a few dollars with crash. How many seconds? I know my market was going to get to this point. Crash. I know the way the thing crashes. The crashes is just one spike. You just start position it. Once it crashes, you can earn like $100 or $50 in one move. Do you get it? So that's the way it works. So I have a lot to share to us. So please, all I just want you guys to do is be consistent and ensure that you are always showing up. Because one day of not showing up, we get you confused the following class. Like I said, it will be simple at the beginning, but as we commence, it becomes to get complex till it becomes understandable. So at this point, guys, do have a beautiful weekend and enjoy the rest of it. Don't, like my pastor will say, don't spend the weekend playing. Go and sit back and study and prepare ahead for the next market week. So guys, have a nice day and happy weekend to everybody. So you can drop your reviews. Please drop your reviews on. You can send your reviews. I would like to take them. You can drop your reviews on my channel as well, on my YouTube channel as well. Follow me on Instagram. Just Pips Continent. That's my company's name. That's my brand name, Pips Continent. Follow me on Instagram, Facebook, YouTube. I don't know TikTok, so it's for children. So these are the major ones. I would like you guys to follow me and make sure you're always catching up with my content. Have a nice day, guys, and enjoy. And get ready to make money with me as we commence in this class. Take care, guys. Mr. Amoloye, I don't know why Mr. AY is not in this class. So I think probably this is a million class he has missed. I don't know if he's able to catch up. But however the case may be, if he's not catching up, he might have to take the duty on himself to keep him afloat. Guys, have a nice day. I need to go and rest now. Okay, you're saying something, Amoloye? I'm with you. Go ahead now.
How do you do it out in class?
Eh? You said?
Well, I was able to reach out to people. And
Okay, what did Favor say?
you could not attend the class.
Oh, Favor is a big man already. He's a big man. Favor knows. Favor is a big man
I was
already.
able to reach out to some people and
Okay, maybe he's at work.
yeah, it's a little bit like that's a good attend.
Alright, no problem. It's fine.
It's a shop.
Alright, no problem. Have a nice day, everybody. Alright, Alpha. Boy, you can end the class and you can go to Yeah, boy, bye.
When do you do the same thing?
Not yet.